Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The technical implications for the Australian dollar have improved after the recent bullish signals posted earlier have given some encouragement for further bullish demand. You can see here that we've got an inverted hammer. Along with that, we had a bullish outside range day and further continuation. The market is now looking towards a level of 67, 65, 75. And also note, was a rejection here from the key level of 66.60. If we do see a break above 67.75 today, this would give an extension up towards 68.45. And it is from there that I do anticipate the market will find heavy supply. Not only is the resistance seen at 68.45, but also the 60-day moving average. So keep an eye on that, as it will give opportunity to shorten the market, as I do believe we are heading from this region back to the downside if we get a break of 65.75. But don't look beyond there as a potential buy zone, because I feel the market will foul. Looking at the US dollar, which covers the greenback strength against a basket of 6 major currencies, displays further strength and crushes the top side of the resistance at 98 handle and posts an intraday high of 98.16. This on the flip side, which saw the bears put their paws on the market and took out the level of 110.30 and now exposes the 109.55.85 level. It is a little bit concerning that the marriage between the RSI and the MACD has married up, and a break beneath 109.55 would give scope towards 108.70 to 108.20. Resistance on the day seen at 110.45. The dollar-yen story, with the help of the greenback strengthening, has put the market back on focus to this supply zone or rejection point, which comes in around 110.30.60. I do anticipate that because of this candle, the market is caught a little bit short, so a squeeze to this point here before the sell-off back towards 109.45 to 108.45.55. Little to say to the pound as it trades sideways and hovers above the level 129.10.30. I do anticipate further tests on this level, and if it's taken out, it would expose the region of 124 to 125, a big point to take note on from the break. Resistance at this stage seen at 130.50. The gold outlook, well, as you can see, the market has recovered slightly from the 48 support, but still a little bit encouragement needs to be seen to put the market balls back in play. And if we see a break above the level of 1,560, then it could see a move up to 72, and then it has to clear the hurdle of 85. Do take some note that the fact is that the bears are still around, and we could see a move back to the downside. Overall, I don't have a strong view at these levels, but I would step in around 35.42 as a potential buy. A good rally overnight after the inverted hammer posted here 2 days ago comes through overnight after oil rallied 2%. It is seen that further upside momentum is required, and therefore a break of 51.60, which is right there now, would give further encouragement up towards 52.5 to 53.5 as a potential target. Dips to be shallow. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report and enjoy the great start to this new